Hello and welcome to CMC Markets Trading Outlook for the week of December the 14th, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic this week is gold, oil, US dollar, stocks, and the really big Fed meeting. I'm sitting here today wondering what's going to be bigger, the Fed meeting or Star Wars? No, I'm not really thinking that. I think Star Wars will be bigger, but for trading in the markets, certainly, it's a really big week with the Fed meeting, and they're not the only central bank meeting this week. There's other major ones as well. We have the Bank of Japan, we have the Riksbank in Sweden, we have Norges Bank in Norway, and so it is actually a big week. And this really is the last big week of the year. After Friday the 18th, we go into holiday mode for a couple of weeks, where news flow will likely be quieter, and the markets as well. And so because of that, we could see a lot of news this week, a lot of action. Let's key in and we'll start talking about the Fed meeting first. Fed speakers for the last 6 weeks, ever since the last meeting, have been basically hinting towards that they're looking at raising rates this week. And for the first time, getting up off the zero bound, probably most people are looking at a 25 basis point increase. Over the last couple of months, we've had much stronger U.S. employment reports. The retail sales report that just came out was in line and relatively decent, and it doesn't look like there's any really big obstacles to stop the Fed from raising rates and starting to get back on side. And one thing we've been seeing with that is showing up in the action in the stock market. We've been seeing stocks rolling over and coming off pretty substantially over the last few days. I'm going to bring up the US 30 here as an example. So we've had stocks rolling over. We had a bit of a double top here, and we're seeing things coming back down. This is not uncommon. I've done studies over the last several decades of what happens in the market when the Fed started raising interest rates. Well, every time that the Fed started raising interest rates in the month before the meeting, the stock market went down. And then what happened the month after the meeting? The stock market started going back up again and did well. And the reason is because it's something that Fed Chair Yellen has spoken about, that New York Fed President Dudley has spoken about, and that is that an interest rate hike is a sign of strength. Yes, it drains away the emergency liquidity that's been propping up stocks for the last few years, but at the same time, that's because the economy is finally strong enough to stand on its own. This is positive for corporate earnings and longer term positive for stocks. Stocks go up in rising rate environments, they go down in falling rate environments, and and then there's a transition in between. Well, we've been going through this transition for most of 2015, and it looks like now we might finally get the catalyst to move past this transition phase and into the next phase of the economic cycle and the market cycle. So that's one of the reasons we've been seeing markets go down. I also, by the way, did some research into the last 10 years. What happened when the Fed did something hawkish in December? What happened when the Fed did something dovish in December? When they were hawkish in December, you saw that the markets went down in the first half and then more than made it back in the second half after the Fed meeting. Similarly, the months where the Fed went dovish in December, the markets went up at the beginning of the month and then they went down. Why? Because a dovish Fed would mean that their outlook for next year is weak. A hawkish Fed means their outlook for next year is strong. So that's why we could still see the markets rebound, even though it could be a tale of 2 weeks. We could see the first half of the market's really rough, and maybe it stays rough through the week, and then if we get the rate hike that we're expecting, and then maybe that does better over the 2 holiday weeks. What's important now? What would be the surprise? The surprise would be if the Fed did not raise interest rates. I think most people are pretty much now locked into expecting a rate hike this year. For months and months, people have been saying we want to get a rate hike in this year. It looks like this is their chance to do it. The other side of thing we want to watch for then is once we get past this rate hike, is then what happens and what do they say about future rate hikes going forward? The US dollar has gone up pretty substantially over the last couple of years, and last year really, and it's gone up against pretty much everything, and that's had an impact on them, and certainly an impact on the US dollar and U.S. exporting. Interestingly enough, it's had an even bigger impact on China, who's of course an even more export-dependent country, and to the point that today, on the 11th, the Chinese government has come out and said, okay, we're going to stop pegging solely against the US dollar, and they're going to start moving to pegging towards a basket of currencies. Why? Well, the Chinese yuan has been holding pretty much steady against the US dollar, minor devaluations here and there, but it's appreciated unbelievably against the pound, against the euro, against the yen, and against the other dollars, the Canadian dollar and the Aussie dollar and so on. So the China's currency has gotten a lot more expensive over the last year against everything pretty much except the US US dollar, and so they need to readjust and rebalance, and then that's a sign of the times, really. So, and also there's talk that over time they'll probably loosen up on the peg and make it a little more floating as well, considering that they're going to be part of the IMF basket starting in the fall of 2016. We'll likely see some more moves towards a little bit more liberalization in trading, which could create opportunities for the markets. Back to the US dollar. US dollar is the big focus this week. So I'm going to bring that up, and let's talk about the currency now. So if we look at the US dollar index, what we will see is that it has actually already started to roll over. This was the ECB meeting last week when the euro spiked and that came down. A lot of this was speculation that the ECB was going to come in mega dovish, which they didn't. They came in somewhat dovish. And so now we're seeing the US dollar start to go back the other way. So what's important is, what is the Fed going to do? Over the last year, the huge gains in the US dollar means people have priced in not only an initial rate hike, but a fairly aggressive rate hike afterwards. We'll recall that the last cycle, they raised 11 or 14 straight meetings in a row. That's not likely this time. They're probably not going to do nothing in January. Maybe they'll raise again in March. And how many rate hikes are we going to get in 2016? Well, if they went every other meeting, you'd get 4. I think most people are looking at 2 or 3. So the next rate hike could be some ways off. Because of that, we could actually see, although we're going to probably maybe see initially a bit of a bump up in the US dollar heading in and through the decision, we then over the coming weeks could see the US dollar start to roll down if the Fed backs off and says, well, we're not going to do anything again for a while. So keep an eye on that. Not only is the decision itself important, but what the Fed says about their glide path from here, also very important, could have a big impact on trading in the US dollar. Moving beyond that, from the US dollar, of course, then we look at its opposite number, which is gold. And gold here could also have a potentially really big week. So gold, if I go a little bit longer term here, let's go 1 week for a minute here. See, gold has been in a downtrend since peaking back in 2012, 2011, 2012. And look, over the last year or so, 2014, 2015, steadily trending lower, falling channel, lower highs, lower lows. So gold keeps breaking Fibonacci levels, and it's generally been here. Look at this on the weekly, though. We're starting to get a positive MACD divergence. RSI is not confirming the lows in the gold price. Most recently, gold's been trading between about 1045 and 1085. Now it's drawing closer and closer to this big 1000 resistance level, and I've been thinking over the last few weeks that would be too attractive. Somebody would take a run at that, want to test it, want to see what they could flush out of there. I'm now thinking that with the potential that the US dollar could be peaking, you saw it rolling down from 100 on the previous chart, that gold's getting close, could be getting close to a fairly significant low here. I still think that gold could test $1,000. If it's going to do it, though, I think it would probably do it in the next week or not for quite some time, because I think after the Fed meeting, we will probably see, even if we do get an initial bump in the US dollar, I do think that we'll see the dollar roll over after that, and I think we'll see gold start to recover. So I've been talking for a long time that I think gold could rebound, and it hasn't this year. I mean, you'd think gold would have taken off with the ECB's quantitative easing program, but no, this was the year that after a few years of following the ECB's balance sheet, gold has gone back to trading against the Fed. So when the US dollar took off, gold had been coming down, and that's been the story in gold in 2015. 2016, the story in gold could be that it has a bit of a recovery. First resistance, 1085, 1100, 1155 in here, and then around 1185. Those are some of the initial moves, but I think we could see a bit of a turnaround in gold as we move forward. The next thing I wanted to highlight is just what could happen then with the US dollar against some of the other major currencies. So we'll start off here with euro dollar. And as we can see, euro dollar has already started to recover. It's been in a pretty substantial downtrend. Blast off 105 to 110, mega move. But look at this. We retested this 128 here, which was a 23% retracement of this downtrend here. Look at this now. We've retested that. We're back up at 109.70, testing 110. So in here is quite significant. And look, this is just below 110, 109.70, the 38% retracement. Look at this, the 50% retracement, 111.11. 1111. This is a Fibonacci level. This is dated back to previous ones as well, and it's a significant round number. 11111, quite significant for euro dollar. And look at this rally, correction, consolidation, higher levels. Symmetrical triangle tells you this is a consolidation, not a reversal. It looks like we do have new uptrend emerging for the euro and then the US dollar rolling over. If we start to look at some of the other ones, let's take a quick look here at cable as well. Not quite as much ready for prime time as the euro seems to be. Cable still trending lower. I think we'll get a better feeling from the Bank of England on when they might start raising interest rates once we hear from the Fed. Interestingly enough, shorter term, this downtrend's been broken. And look here, we've got the RSI lifting up over 50, and we've got the cable here peaking up over 152. So it does look like it's starting to turn. We do have this positive RSI divergence as well. We start to get a move up. 50-day average near 152.40. 200-day moving average near 153.20. This does look like it's starting to pick up a little bit here as well, and could benefit from a weakening U.S. dollar. Let's look at dollar yen now. Same sort of thing. Look, we've been putting in a big top here. This I thought might be a weak head and shoulders. It may be a triple top, but regardless, here with this lift up we've seen, we're kind of seeing some topping here, broken an uptrend, and now look at this. In the last couple of days, the yen has started to roll down. This first support it broke was 122.20. Next one, 121. Round number 120. And look at this down here where these wicks kept dipping down to here is 119. So we have some room for some downside. And look at this here. Head and shoulders top, double top, big rollover, under 50, still falling here. Definite momentum shift in dollar yen to the downside. And similarly, if we look at dollar CAD, dollar CAD has been impacted by what had been showing signs of topping. Now the crude oil price has weakened. That's driven the dollar CAD up for another up leg. But look, it's running into resistance here about 137. It's getting pretty overbought here. At some point, this could probably drop back, retest this breakout point around 134.60, maybe the 135 round number here. So there is potential for a correction, but I can't say at this point that this has peaked. It hasn't, and the trend remains intact until it tells us otherwise. But keep an eye on this one. This pair could be particularly volatile if we see any kind of movement in the dollar and in the oil price. And I'll just wrap with Aussie dollar on the currency side. With Aussie dollar here, we're just seeing it continuing to base build as well. Nice big ascending triangle forming here. I just want to move on now and talk about. Why don't I take a second here and I will show the yuan. So here's dollar yuan against here it is here against the U.S. dollar. So here U.S. dollar strengthening, Chinese yuan starting to weaken, and there's a feeling obviously that it could weaken. But if we take this now and we go to where is my anyways, it's here CNH yen. Right. So now here, this is the CNH. It's been so where it started to weaken against the U.S. dollar. Look at this. It had been flat, and then it started to weaken against U.S. dollar. Look at this. It had been very strong against the yen, and now it's starting to roll over as well. That's a very interesting chart as well. So that's something significant to look at there. And finally, I'm going to wrap with the oil price. Let's start with Texas. Big potential support test this week. We're looking at going back here. Let's pull up the monthly chart, shall we? And what we're going to see here, look at this. We're back to retesting this 2008 low here, $34.75 to $35 area here. And that's the big test that's underway now. And the market's been kind of drawn to it lately. And particularly since the last time it broke 40, it's been seeming as though people have been wanting to test this 35. Now, what after that? Well, if we go back here to the old one low was 17, this is 20, this low here is about 25. And what I suspect we might see happen is if crude breaks 35, I think you'd see a whole bunch of stop losses get triggered, a lot of weak hands getting shaken out, and you probably probably see it spike down into whether it's 30 or 25 or 20 in a fairly short amount of time, and then not stay there, and then start to work its way back around again as a sort of a final flush. And what's interesting here is, well, let's look at this here. Oversold on the monthly RSI and over a positive divergence as well, which is also suggesting that we're probably getting close to some kind of a significant low or at the end of a trend, but we can't call it yet. We can't say it's turned because it hasn't. It still could test 35. You still could get a final flush on crude oil on the Texas side. And let's take a look here at the Brent chart before we wrap up. Brent, look at this minute chart, still accelerating to the downside. Let's bring up the daily chart here. Crude oil Brent, same thing. Broke 50. 50 became new resistance. Now it's broken 40. It's still going down here. Its 08 low is here, and that is about 37, so not that far below here, but then here that's 33, so maybe somewhere between 33 and 37 is where Brent crude could start to find a support zone. Once again, positive RSI divergence and an oversold RSI, so at some point we could start getting pretty washed out on crude oil. We may not be quite there yet. Maybe this is the week, maybe it's not. It's hard to tell with crude oil at this point in time, but the one thing it does appear is that the market could still remain active for trading for quite some time. So there's a lot going on in the market this week. As I said, this is probably the last big week for news of the year. Lots of central banks. The Fed's the big one, but there are others. There's a lot of economic data coming out too. I didn't even really get into that, but there's a number of reports from the United States, from the United Kingdom, from the Eurozone as well, and some of those could attract some interest, although I still think a lot of the focus will be on the Fed.